Well, using taxpayers' money to save bankers, not exactly a popular concept among citizens. Sascha Steffen joins us now. He's a professor at the European School of Management and Technology here in Berlin. It's good to have you with us. Well, first of all, as a banking expert, how, let's say, unpopular do you feel at times?
I actually don't feel very unpopular. I think so that people are actually not blaming me for things that are which are currently going on, but rather come to me and ask specific questions to understand exactly what's happening and try basically to boil down the complexity of this whole situation.
Well, let's try and boil it down a bit now. I mean, 5 years after the big bailouts, the big crisis, what's the situation like for European banks now?
Yeah. I think the situation is better than it has been a couple of years ago, but it's still a long way to go. I mean, if you look at, for example, the valuation of the company, it's still below 50% or 60% per euro. So this means that there's a significant amount of risk still in the balance sheet where we have to take care of.
Like what do you say, significant amount of risks in the balance sheet? Do we have a figure for that already?
We don't have exact figure, but I mean, there's a lot of things which are going on. On the one hand, there's the sovereign debt, which is a big issue right now. There's a lot of bad loans which are on the balance sheets, particularly of the peripheral banks, but also on German and other European banks as well.
Now, I mean, obviously, 124 European banks will have to undergo the so-called stress test now in spring and in summer. And a lot will depend on whether the government bonds, the banks holding government bonds, whether that will be taken into account, because some say there's no risk at all. Others, like the CEO of Commerzbank, says absolutely these bonds do harbor risks. What's your take?
I absolutely agree with Mr. Blessing, and I think 2 days ago we had new information from the ECB where they made the clear point that sovereign debt is risky, and so we have to treat it as a risky investment. And I think this is the hope that the risks of the sovereign debt is in some way figured into the outcome of the stress test this year.
Okay, what if the outcome of the stress test shows that some major banks, maybe also systemic relevant banks, can't meet the financial requirements? What then?
So first of all, they have to try to raise equity in private capital markets. Then there might be a bail-in of some subordinate debt holders, but I think then there has to be some sort of public backstop. So there is a substantial amount of debt, of bonds in the balance sheets of the banks, which could be used and transferred into or converted into equity. But if this is not sufficient, then there has to be definitely taxpayer or state money as a backstop for these banks.
Whatever happened to the idea that banks pay into a rescue fund in order to save themselves?
This is a very good idea, but it's still the 55 billion which people are talking about is basically very little compared to the balance sheets and potential capital shortfalls of these banks. Plus, it takes a significant amount of time until this fund is actually available. So this is a clear indication that there needs to be some public money as a backstop.
Okay. Well, it looks like there's still a long way to go for banks to be on a sound footing. Sascha Steffen, thank you very much for being here.